GoodRx is one of the most beloved brands in America, boasting a higher net promoter score than Amazon, Disney, and Netflix. But does this stock deserve a spot in your portfolio? Let's run this company through our investing frameworks to find out. My name is Brian Feroldi.
And my name is Brian Stoffel.
Thanks to StockCard.io for sponsoring today's video.
Now, Brian, I'm no healthcare expert, so when you brought GoodRx to the table, I didn't know much about it. Can you tell us what this company actually does?
It's a little convoluted, but GoodRx is an app that consumers can download to their smartphones and use it to get significant savings on prescription drugs. GoodRx operates a proprietary technology platform that connects pharmacy benefit managers, pharmacies, manufacturers, prescription assistant programs, and consumers to each other in order to help consumers find the lowest price on drugs that they have to buy every day. A consumer simply downloads the app on their smartphone, inserts their prescription drug into it, and then GoodRx technology will scour all different pharmacies in order to find that patient the lowest possible copay on their drug. The patient can then take that, print off a digital coupon, present it to their pharmacy, and they are guaranteed to get the lowest price on their medication. The nice thing about this technology is that in theory, everybody that interacts with it comes away as a winner. The patient gets the lowest price on their drug. The physician gets to remove cost as a barrier, which was one of the biggest challenges they face with getting patients to take their drugs. The pharmacy gets to fill a prescription that might have gone unfilled otherwise, and the healthcare system in general saves money by the patients actually taking their medication.
Now, it's really helpful to look at an example of just how significant these cost savings are. GoodRx called out this one example of Abilify, a depression treatment in California. In the same community, that prescription might cost as much as $226 per month. But if they just go to another location, again, in the same community, it's as little as $11. So clearly, this is a benefit to that person who is able to get the medication. Now, you might be wondering, how does GoodRx get paid? Well, when a consumer takes that coupon and goes to the pharmacy to get their medication, when that is filled, the pharmacy will send an administrative fee to the pharmacy benefits manager. When they receive that and they see that this came via GoodRx, that pharmacy benefits manager will send a portion of it to GoodRx. The customer doesn't have to pay anything. It's the pharmacy and the benefits manager that end up paying GoodRx.
Because GoodRx promises such huge discounts on prescription drugs, the number of users on this platform has been growing rapidly for years. In the most recent quarter, the number of monthly active consumers grew 31% to 6.4 million. And GoodRx also has a premium plan where consumers can get access to even higher discounts if they choose to pay a monthly fee. Growth on that plan grew 68% to more than 1.1 million users. All right, Brian, time to take this company to the anti-fragile framework. What is GoodRx's mission statement?
It's to help Americans get the healthcare they need at a price that they can afford. I love that. That is simple. It is definitely inspirational, and as we'll see, it's optionable too.
I also love it. I'm going to award them full credit on that. All right, let's moving on to Moat. Do you think GoodRx benefits from the network effect?
Yes, GoodRx does have the network effect, but it's a weak one. The company calls out the network effect in their latest investor presentation, making the argument that because it's a trusted brand and it will scale, then it can get better unit economics and offer better products to customers as a result. I'm not totally buying into that, but I'll give them a little bit of credit for it.
I'm right there with you. I'm not going to give them a lot of credit for the network effect, but I will give them a tiny little bit. I do think the more buying power they have, the lower prices they can negotiate, which could give them an edge versus their rivals. But like you said, this isn't a very strong network effect. Moving on to switching costs. You think GoodRx benefits from that?
Absolutely. And you might be wondering, switching costs? Well, you can go wherever you want to get your medicine. These are sneaky switching costs. That's what I call them. And I came up with that term because I think Netflix benefits from it. How does this compare? Well, if I need a medicine that I can't afford, and then all of a sudden I can afford it because GoodRx finds a location that it makes it affordable, then I'm just going to keep going and filling my prescription there. Most of the prescriptions that we fill in the United States are for chronic conditions. Chronic means it'll probably be with us for the rest of our life. So if my first prescription is filled using that GoodRx coupon, I don't have to use that coupon over and over again, but GoodRx is going to get paid every single time I go back and refill it. I have no reason to change where I'm refilling it it unless I move. So that is a sneaky switching cost. No, it's not that hard to switch, but why would anyone switch? And with 80% of this being repeat activity, it's clear that when you get a customer and they use GoodRx, that is recurring revenue.
Totally agree. Once you download the app and use it for the first time, what is your incentive to switch away? There is none. Moving on. Do you think GoodRx benefits from a low cost advantage?
I don't. You made the argument that they could be if they reach a certain level of scale, but I'm not convinced that's present yet.
Yeah, I already gave them some credit for that in the network effect, so I'm not going to double up and also give them to low cost advantage. You could argue that the company does have that working for them at this point, though. How about intangibles? Brands, patents, proprietary technology?
The company's brand is stellar, and that proves from everyone who touches this product. Both healthcare professionals and consumers give it a net promoter score of at least 90. A net promoter score of 90 is pretty good, but Brian, you're the expert on this. How good is that?
A net promoter score of 90 is insanely good. Look how this company compares to even beloved brands like Netflix, Amazon, and Disney. It crushes them. Importantly, this brand is both beloved by consumers, the ones that are using the technology, as well as the healthcare professionals. That makes sense. Consumers get this for free and they get lower drugs prices. Healthcare professionals get their patients to use this technology free and they get access to drugs. It's a huge win for both of them. It's no surprise that consumers love the brand name. Moving on to counter positioning. Does GoodRx benefit from that?
Not that I could tell.
Yeah, I'm right there with you. I don't think so either. Moving on to optionality. Do you think GoodRx has optionality built into its bones?
I do believe it has optionality built into its bones. I'm not entirely sure that they are able to fulfill that optionality, but the company calls out a whole bunch of things that it's doing. So GoodRx is building a platform to be with you from prevention and research to that diagnosis and getting the medicine, but all the way to refill reminders, subscription programs, mail delivery. They even have a telehealth aspect. So I think that the platform's there. I'm just not convinced that it's dominant yet.
I think this company has more optionality than you're giving it credit for. Their core business is still what's driving the lion's share of revenue, but I like the move into both telehealth and to the subscription play off of their core brand. I think this company has a decent amount of optionality built into it. Moving on to financial statements. What do we see as of September 30th, 2021?
The company has a cash position of a little over $900 million. It has some debt, but not an unreasonable amount at around $650 million. And most importantly, the company has consistently been free cash flow positive, and that free cash flow has been consistently growing, currently coming in at about $109 million.
Financially, I think this company is in really good shape. I wish it didn't have the debt, but that positive free cash flow gives me confidence in this company's financial future. Time to check out the bad stuff. Does GoodRx have any customer concentration issues?
It does. It has 3 customers that account for 42% of revenue. Now, before you get too worried, that is the nature of the business. Those 3 customers are pharmacy benefits managers. We already showed you how the company gets paid, and there are only so many PBMs that exist in the United States. So that kind of just comes with the territory.
That is the nature of the business. And if you want to know why we think customer concentration is a big issue, click the link you're seeing on your screen to see a video on just that. Do employees like working at GoodRx?
Boy, do they. A 4.5 is a great score. They love their CEOs, and 9 out of 10 would recommend working there to a friend.
Incredible scores. And are the founders still involved?
They are. Trevor and Doug founded the company. They are still at the helm, and they are co-CEOs. They're one of the few pairs that shows that it is possible to do it this way.
Love to see that. Is inside ownership high here?
It is high. If you combine the stake that those 2 co-owners have with everybody else on the inside, they own about 16% of shares outstanding. As of this filming, that's worth about $2.4 billion.
Love it. Love seeing that level of skin in the game. Before we show you how this company scored on the framework, wanted to give a shout out to our channel members. Thank you so much for joining the channel. It means a lot to us. If that interests you, you get access to badges and emojis whenever you comment. It also gets you access to member-only voting on what stock we do from scratch next. If that interests you, click the join button that you see on the channel. Okay, Brian, let's take it from the top. What'd you give GoodRx for mission statement?
Full credit, awesome mission statement, +2.
Great. Moving on to moat. What'd you give him there?
Well, you combine the weak network effects with the stronger switching costs and also the brand value, and I gave him 3.5 points.
A decent score. How about optionality?
So I gave them 2 points here, and it's important to point out that, your argument would be that it should probably be 3. If you agree with what Brian's saying, make it 3 at home.
Yeah, I think it should be a little bit higher, but I respect your decision to make it 2 points. How about for financial fortitude?
I was on the fence. I ended up giving them a half point instead of a full point because of the amount of debt that they have, but I want to say that positive and growing free cash flow is a very good sign.
Okay. How many points did you subtract for customer concentration?
I took 2 points off, and this was actually a little bit generous because it's so much, but also I understand that that is the nature of this industry.
Perfectly fair in my opinion. How about for Glassdoor?
+1, great place to work according to the reviews.
Founders?
Both still involved as co-CEOs.
And ownership.
They own a ton of it, +1.
Add all that together, Brian, and that gives us a 9, which is in your robust category.
Yes, and again, at home, if you agree with what Brian's saying, and you add a point for optionality, another half point for the financials, you're looking at a 10.5.
Not bad at all. Let's quickly take it through my investing framework. For the financials, I gave it out of 14 out of 70. Lots to like here, although I did subtract 1 point because of that debt position. For Moat, I gave it an 18 out of 20. I gave a few points for the network effect, few points for the switching costs, and a few points for the brand name. And because the company has added customers so rapidly, I gave it a 5 for mode expansion. For potential, I gave it a 16 out of 18. I think this company can grow rapidly for many years to come. For customer quality, I gave it a 7 out of 10. They are a little bit expensive to acquire, but once you acquire, and then their spending is essentially recession-proof. For revenue quality, I really like what I saw. Revenue is recurring and very high margin. Love that. Management and culture, love the mission statement, love the founders are still involved, love the high inside ownership. I gave it a 13 out of 14. The stock category was actually pretty weak. I only gave them 1 out of 11. This stock has underperformed the index since this company came public, and the company has only outperformed Wall Street's expectations once. I think this number could meaningfully improve in the future, though. And for the gauntlet, I hit them in a number of places. I subtracted 3 points for customer concentration, 2 points for dilution, and 2 points for growth by acquisition. You could argue that I'm being too harsh there, but I think those are conservative numbers. You add all that together, and I gave GoodRx a 71. I think that that's actually a pretty good score considering that this company has underperformed the index moving forward. And more importantly, I think it's a stronger company than my score would indicate.
Which is altogether interesting because it's a stock that you own and I don't, but on my framework, it got a 9, which comparatively is a little bit higher. I definitely think that this is an investable stock, even though I don't own it.
Yeah, it's a company that I really wanted on my part of the scorecard. Speaking of that, let's head over to stockcard.io and hold ourselves accountable. All right, Brian, let's start at the anti-fragile portfolio. We're going to put in the ticker, which is GDRX. We're going to do a buy decision. Today's date is Monday, December 6th. This is a $38 stock. We're going to put in 25 shares. The current price is about $38, and this scored a 9 on your framework. Next, we're going to head on over to my portfolio, and we're going to do the exact same thing.
And while Brian's doing this, we want to remind everyone that you can head on over to stockcard.io, and you can see our portfolios for free. But even better, by registering with StockCard and becoming a member, you can create your own portfolio. And while we don't believe in following the stock market's short-term moves, creating a portfolio and evaluating it over the long run is one of the greatest investing tools you have at your disposal. StockCard has a great tool to help you do that.
Overall, our framework showed that GoodRx is clearly an investable idea, and it's a company that I want on my portfolio moving forward. Brian's out.